This is an Uncovered Japan Company research report on Nippon Signal, ticker 6741. Nippon Signal is Japan's largest railway signaling maker, helping keep trains, stations, and traffic systems operating safely. The investment question is whether its long-established safety moat and rapidly more profitable ICT Solutions business can earn a valuation closer to book value. At the report's reference point, Nippon Signal traded at 10.4 times forward earnings and 0.86 times book value, alongside an estimated 8.9% return on equity and a 3.5% dividend yield. The report scores it 16 out of 20, but the low valuation says the market still wants evidence that the recent profit step-up can last. Nippon Signal's products are easy to miss because they work in the background. They include fail-safe train control and interlockings, platform screen doors with three-dimensional sensors, and automatic fare collection, such as ticket gates and touch payment systems. Rail operators buy these systems for reliability and certification. In a safety-critical network, a supplier's long field record matters far more than simply offering the lowest price. The group is balanced across two segments. Transport and traffic infrastructure contributed 59.2 billion yen of FY26 sales and an 8.8% operating margin. ICT Solutions contributed 54.9 billion yen, but a much higher 19.2% margin. ICT includes fare gates, platform doors, parking, and robotics and sensing. It generated roughly 10.6 billion yen of segment operating profit, more than the historical transport core. Over the 5 fiscal years from FY22 to FY26, revenue rose from 85.0 billion yen to 108.0 billion yen, a 6.2% compound annual rate. Operating profit rose much faster, from 5.39 billion to 10.0 billion yen, a 16.7% compound rate. The group operating margin improved from 6.3% to 9.3%, with the decisive step-up arriving in FY25. ICT Solutions is the reason profits have re-rated internally, even if the market has not yet re-rated the shares. Its margin rose from 8.9% in FY24 to 17.8% in FY25 and 19.2% in FY26. Better profitability in fare collection and parking, higher margin smart city projects, and the ramp of sensing products helped. But 2 strong years do not yet prove a permanent run rate, so this is the most important figure to monitor. For this project-driven company, orders are a leading indicator. In the first 9 months of FY26, orders reached 86.0 billion yen, up 16.4% year-on-year. Transport orders rose 11.0%, and ICT orders rose 22.5%. Revenue timing can be lumpy, especially in the March quarter, but order intake running ahead of sales supports the case for a growing backlog. Nippon Signal's moat is not simply a patent. Japan's signaling market is an effective 3-company oligopoly, where operators require certified, fail-safe systems with decades of field history. Once signaling is installed, it is deeply integrated with the railway and is renewed over long cycles, rather than casually replaced. Nippon Signal's nationwide maintenance network and broader product portfolio reinforce that incumbency. The near-term growth drivers are practical rather than speculative. Platform door installation supports safety and accessibility. Labor shortages support automation and radio-based train control. Touch payment and QR-enabled fare gates are modernizing station operations. Management's longer-term aim is to move downstream into operations and maintenance and cloud monitoring, increasing recurring revenue and reducing the dependence on uneven project completion timing. Nippon Signal's balance sheet is unusually strong for a project business. The FY26 equity ratio was 66.4%, and book value per share reached 1,833 yen. That strength gives it capacity to finance long-duration projects and working capital. The trade-off is that about 31 billion yen of policy shareholdings also enlarge equity and depress return on equity, creating a clear capital efficiency issue. The valuation is modest. The report places forward earnings at roughly 10 times and price to book between 0.85 and 0.93 times. The wider peer group also trades below book, but Nippon Signal stands out for stronger financial health and a better return profile. A re-rating would depend on 2 things: ICT profitability holding up and management translating policy share reductions into stronger capital efficiency or shareholder returns. Nippon Signal combines a hard-to-replicate railway safety moat with a newly high-margin ICT profit engine, visible automation demand, and a strong balance sheet. The risks are equally specific. Project timing can make quarters volatile. ICT margins may partly reflect favorable mix. Overseas projects carry execution risk, and policy share reductions must translate into better capital efficiency. This is educational research, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.